Uh, let's focus on the FMCG space for now. Quite a few FMCG companies have come out with their Q2 business updates. Abneesh Roy, the Executive Director at Nuvama Institutional Equities, joins us on the show. Hi, Abneesh. Thanks so much for joining in this morning. Well, out of all the updates that have come out, what stood out for you in terms of a positive as well as a not so positive update?
Sure, thanks. So we have had a few updates which have already come. Few are still awaited. Dabur, Titan, etc. We are still waiting. But based on the positive updates, clearly Avenue Supermart was positive. Nykaa, which has come yesterday on the fashion side, 30% plus kind of a growth Nykaa has delivered. That's positive. On the beauty also, 20% growth is in line with our expectation. If I see FMCG, Godrej Consumer with around 22% EBITDA growth, 5% volume growth, 5% console sales growth. Indonesia, 10% kind of constant currency. I would say that that's in line with our expectation, but it will be close to the top tier in the FMCG results when eventually we'll have the results. Marico was bit muted and weak in a lot of the parameters, although EBITDA and PAT growth for Marico was decent. Double-digit 10-11% EBITDA growth because of the copra being soft. But in terms of volume growth, it was soft in most of the India businesses in terms of the Saffola, in terms of the Parachute and Vaho also. But yes, the youth portfolio and the foods portfolio for Marico did well. So Marico, I'll say, was below expectation, but that's also because regional players have come back in the coconut oil and in the edible oil also because of the sharp deflation in the raw material. We are seeing that impact. Second is because of the El Nino impact, clearly now rural demand has turned worse. August month, we had earlier also highlighted that 36% deficit was there. That has led to rural sentiments turning weak in August. And September month, the festival demand got shifted. That should come back in Q3. So overall, positive on the results aspect, Avenue Supermart, Nykaa, Godrej Consumer from a profit growth at least, and volume growth of 5% is not bad given the El Nino impact and the very uncertain and very volatile rains. So these would be the key takeaways from the updates till now.
You think for Nykaa, Abneesh, the worst is over as far as the stock performance is concerned? In the last 6 months, the stock has gained about 12% from the lows of 100 rupees. Now it's almost at 140 or so. Given that the numbers are good this time, the outlook from the management is positive, you think the worst is over, and what kind of an upside do you see on the stock?
Absolutely. I think this is a good performance. We have seen that a lot of the e-commerce companies are now focusing on the profitability. Nykaa is a very strong platform. It went through its own pain, especially in the fashion part of the business, but with a 20% growth in the BPC and 30% plus growth in fashion, I think it's a good performance. So yes, the stock should re-rate from here from the near-term, medium-term perspective. But ultimately, it will also depend upon margins. It will also depend upon how the Q3 pans out. But yes, I would say that now, in terms of competitive intensity, we are seeing a bit more rational behavior. But we would need to see what Reliance is doing in terms of the beauty business and what Tatas are also doing. Both are very serious players in the long term. But yes, from a near-term, medium-term, I think Nykaa stock should re-rate from here, given the good update which has come out. Margins remains a monitor.
Okay, margin remains a monitorable, but otherwise you like that. Got it. Any of the companies, there are a couple of these names like Marico, Godrej Consumers, etc. I know we discussed it, but they've also talked about a slowdown in consumer spending, right? And the consumption patterns on the whole. Do you think some of these stocks could move to the back burner compared to their peers? Just trying to understand which are the stocks where you're underweight on now?
Yeah, so if you see once the results come out, because we have had business updates from a few companies, we'll be overweight on Nestle, Tata Consumer. We also like Colgate, Godrej Consumer and Dabur. So these 4-5 companies will be overweight from a results perspective and from a near-term perspective. In terms of the slightly weaker performance, we'll see Bajaj Consumer. We discussed Imami. Those will be on the weaker side. Even Britannia, the results will be weak given very high base and local players have come in biscuits. And margins are also now normalizing in terms of the base. So those will be at the bottom tier from a Q2 results. In terms of the middling performance, I will say HUL, Dabur, etc. Those will be in terms of the middling performance. United Spirits also, there will be compression in margins quarter on quarter. ENA has gone up. Plus, because of the Adhik Maas and Karnataka price hike, volume growth in United Spirits in Q2 will be weaker versus the Q1. But still, I think Q3, there should be revival. Plus, the UK FTA trade agreement, I think that's a key monitorable. That will be positive for United Spirits. So that's how we should play the sector.
Okay, all right. Abneesh, I wanted to ask you about this pizza versus burger argument. And we're getting into a World Cup as well. And we know a couple of days ago, Jubilant, they offered some kind of, offers, price cuts as well. What's your view on Jubilant Foodworks in particular? Given all this in terms of a backdrop, it's a solid brand though. It used to be a favorite as well. At these prices, what is your view?
So three things. One, of course, Q2 results will be weak for all QSR. It is still tough times. The base becomes favorable from Q3. So that's a good development that in Q3, the results, etc., the base comparables become a bit more helpful. Yes, you are absolutely right. Cricket and pizza are having much higher relation to each other versus a pizza versus a burger. Pizza travels much more in terms of the delivery format. So I would say that yes, Domino's should benefit more, and that's why Domino's has been a bit more proactive in terms of the promotions. We have seen the news flow. It is not a price cut throughout. So yes, I would say that even the third aspect is the milk prices. Milk prices are cooling off from the peak, and that benefits Domino's more than the burger chain. So yes, from a near-term perspective, it will be Jubilant Foods which should benefit in the Q3. Having said that, when I combine valuation, when I combine the expansion, I think Sapphire Foods stands out from a one-year perspective. But yes, from a cricket, Jubilant Foods should benefit more.
All right. Thanks a lot for joining in. Appreciate your thoughts, Abneesh. That's Nuvama Institutional Equities with their view.